Well, in business news, crude oil prices have reached their best levels of 2016 in recent weeks. Africa 54 business correspondent Jill Malandrino in New York met with Jamie Baker of Baker Bots to discuss supply and demand fundamentals.
Crude oil inventory continues to build and the Saudis are actually dialing up production. Jamie, why do you think that we're seeing an increase in oil prices? Because they really have recovered since the February 11th low.
Well, they've certainly moved quite a bit since February. I think that in some degree the movement is attributable to trading contracts that were expiring in the late February, early March period, and so people were having to cover their short positions. I don't think outside of the trading community anyone ever thought oil would get below $30. And so much of that bounce, I think, relates to financial considerations rather than supply and demand considerations. But another thing that I think is driving this is I think a lot of the significant producers are driven by their political considerations as much as they are by economic considerations, and so they are not responding to forces in the marketplace necessarily as they are thinking about how to achieve their political or strategic objectives.
Now, in the United States, going into the summer season, it's considered more high demand as more Americans are driving. Do you think that at this point demand may outpace supply?
I think demand will increase, and I think it'll come into better balance, but I don't think that those curves are likely to intersect globally. At least they won't be likely to intersect this year. The EIA is suggesting that inventories will continue to accrue at about the million barrel a day rate through the end of this year and into the first quarter of 17. Having said that, I think you will see some movement in price. Some of this is momentum driven, and some of it relates to increasing demand, whether it's in China or the first quarter traditionally is a slow quarter for the U.S. economy, and so I think that there will be some demand driven growth in the price curve. And
what about from $45 to $50? Is that the appropriate level based on supply and demand right now, or do you think it should be trading higher?
Well, that's kind of a speculative question, but I think that if you survey many of the experts who are following this very closely, the one-year projections are in the $50 range. So I think that for this to move from $45 to $50 is still a 10% move, but it's not out of the realm of possibility.
Well, it's just like when we talk about stocks. Stocks don't have to go up forever. There's really no reason that oil should have to be at $60, $70, $75 a barrel. If this is the appropriate level based on supply and demand fundamentals, then this is where it should be.
Well, sure, that's true, but you've got to take into account the effect of inflation. I mean, at $35 a barrel or $45 a barrel, the 1973 equivalent is something like $2.50 a barrel. So I think that you're right that prices don't necessarily need to go up, but they are really at pretty low levels historically speaking, inflation adjusted.
Okay, thank you very much, Jamie.
Thank you.
For the Voice of America in New York, I'm Jill Malandrino.